Thank you for joining us for Trading Buddies on this Monday, the second last Monday, of course it is, of October. Hope you're enjoying today so far, and it improves somewhat because you've joined Trading Buddies and maybe makes a little bit of money. If not in the show, then maybe as a result of it. You are very welcome, as always, to share your views, ideas, trades, whatever. Ask questions, whatever you want. It's your show. It's all about you guys. And Ash, pardon me, Ash and I are only here to facilitate a sharing process. Of course, we will share our ideas, as will George when he comes into the room a little bit later. But if you want to share yours, please do so. That's what we're all about. Righto. For those of you here I don't think there's anyone here for the first time. So we will go through that particular process and move on to one that's a little bit more familiar, which of course is the gold chart. And my goodness, if you were trading gold last week, and of course I wasn't around, actually I had a shit week last week, an SH1T week, sorry, last week. Wasn't very well at all. I was traveling on this day last week, but thereafter, my oh my, I spent most of it in bed, not doing the things you would rather do in bed, like sleep, of course. I was suffering. Pleased to say, fairly much better today. Happy Monday to you too, Paul, and happy new week to everyone. Righto, let's get stuck in, shall we? As I said, if you were trading gold last week, and maybe even the week before, you would have done quite, in fact, you would have done well. That one a bit tricky. That one a bit tricky. That one a bit tricky. That one should have been okay. That one a bit tricky. But last week, oh, that one a bit tricky too. Actually, you would have got hammered on that. You wouldn't have on that. Winner, 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 and winner again on Friday. So 4 out of 5 last week, maybe 1 out of 5 the week before. Balancing act. All right, today, let's put that behind us. It doesn't matter one thing to me because I wasn't around. Today we've got a bit of a gap down in gold. I'm not going to do any commentary on gold right now. My goodness me, this war scenario is perplexing, is it not? But if you believe that it's going to have a long-term effect, or even a big effect than it is at the moment, then gold is probably where you want to be. Not for me. 2 reasons. 1, I'm not in, and 2, I'm not yet convinced that we're going into a complete risk-off scenario. Certainly, we're in one at the moment. There's no question there. Righto, range today is that bar there is where it begins. So the low thus far is that bar, bottom of that one. No, it's the bottom of that one actually. And the high is the top of that one. So it's a pretty tight range. Well, let's put some lineage around it. Well, I had to dip right down there, didn't I? See what happens when you miss a week. There should be another one down here somewhere. Yep. So there's our range at the current time. That may well change in the next 2 minutes, as we are very near the high. Do I want to trade this is the question. And those of you who know me and how I trade, you're going to say, no, he's not going to trade that. No way in the world he's going to trade that, because he's got a daily pivot untested here, and he's got a weekly pivot untested here at a support level, and I suppose at a resistance level as well. So definitely won't be trading it, because the propensity for this to go at the moment until something happens from a war perspective, I would suggest is quite strong. Breakout to the upside, probably the most probable, but yeah, going to the daily pivot without any profit just doesn't make sense to me. Not trading from a fundamental perspective. This is not something that I do. What I do is take a very big notice of what's going on, and if it lines up with something technical, then that makes sense to me. Technically, this doesn't make sense. to trade into that with your risk of what, $13, $14, and your reward is $5. Not for me. And down here it's not even $1, I don't think. Maybe $1.50 or something like that. So yeah, the reward to risk doesn't make any sense to trade it, so I won't. I think we'll be talking about gold a little bit later, so I won't dwell on it now. But if anyone's got any comments to make on gold or otherwise, then as always, feel free so to do. But as I said, I think we'll probably be talking about gold as we go along, given the circumstances under which we find ourselves and have done for the last couple of weeks. Not my focus, as I said, and I better update you guys on where I'm at. And this was a combination of fundamentals and technicals, and I thought it was absolutely spot on to take advantage of that situation. And I know that's it's a little bit difficult to say take advantage of a situation, but that's not our job to be circumspect in that area. Our job is to make money, and when those opportunities present, that's what we need to do. So with Aussie Swissy, I thought this was an absolute ideal opportunity. We were already at and had come off a strong resistance level, previous support over here, resistance here. And it presented us with a rally back to the weekly pivot of 3 weeks ago, and then put in this game changer bar. That's all I needed to see with the war situation happening at the time. So let me explain that a little bit further. If the market was going to go risk off, then an obvious play was going to be a risk on currency, the Australian dollar, versus a risk off currency, the Swiss yen. So when that candle presented, that, as I said, didn't need a second invitation, and that continues to be a decent trade. Look, as I said from the outset to my guys, with this war situation, I was very much of the opinion that nothing had really changed until something else happened. And that something else, of course, would be the rest of the world or some major player joining in the fracas, or certainly not the atrocities, but the war itself. And that now seems to be, well, certainly the market has gone in that direction, a risk-off direction, over the last 2 weeks. And I'm still of the opinion that really nothing has changed, apart from the enormity and the scale of the devastation and the atrocities going on over there. And that's why the world, of course, is up in arms, and we're seeing protests all over the world in that regard, because it's just atrocious what is going on over there. But has that changed? And, I'm still questioning that. So are we going to go completely risk off? Is the world going to collapse? I don't know. I really don't know. But like I said, I thought this was an opportunity to take advantage of that, if that was going to be the case. And if I've got a technical lining up with a fundamental, then all the better. So that's why we're in Aussie versus the Swiss. And the other reason that we're in a risk on currency versus a risk off currency is on the weekly chart on the Kiwi yen. I think I've been calling this since way back here somewhere, that we were looking for a short on Kiwi yen. And finally, we got a bounce off the top of that channel. We got a reversal bar. That is the game changer bar. And again, I didn't need to see any more, so we're in that trade as well. Haven't taken any profit on this one. I'm just happy to let it ride. My stop loss is now at entry, and I did that last Friday, I think, just because I thought, again, explaining the way I feel about this situation is still okay. I say nothing's changed. Nothing had changed at the time. The only thing that's changed right now is we're getting a worldwide reaction, and that could well fester into something far more substantial than what we're seeing, which is atrocious. I keep saying it, it's atrocious, but they've been pouring atrocities on each other for quite some time. So Kiwi yen, I expect to finish up down here from a technical point of view. And if the world does continue this risk-off scenario, then that may well happen in a shorter time frame than I anticipate otherwise. But both of those lined up, both technically and fundamentally, so they were the no-brainers for me. Today, I think there's an opportunity to continue with dollar strength. And if we look at the dollar index, I'm a little bit surprised that we haven't seen this rally a little bit more, given that we've seen other flights to safety certainly underway in terms of gold, oil to a degree, silver, and the Swissy in particular. But what I am seeing here is a lovely little, again, technically, I've got a lovely little slingshot candle pattern here, which suggests to me that the next move in this one is going to be up. And of course, we do have a target up here. We've had that for quite some time, around about 108. And we've had a beautiful break and retest at the top of that channel that we've been in for the longest time. Prices failed to come back to that level. And we now have a situation where we've got a double cross almost on last week's weekly pivot. So that to me looks to be a buy here, which equates to, on euro versus the dollar, a sell on the weekly chart. So same sort of thing. I refused to trade this last week. Was I here last week? No, it was the week. In my group. Sorry, I wasn't here last week, but in my group on Monday morning, I said I'm not going to trade this short because we've got a low test bar followed by a high test bar, and I call that a prickly pair, and that's something that you don't want to pick up as a prickly pair. So I've now got an inside bar on that rejection bar of the previous week. That to me is probably doubly good, if you like. It would confirm to me, if price were to come back to that level, that these dudes are in charge, and we are going to get a bounce off the weekly pivot, and we are going to go short. I've also got 3 amigos sitting here. The bottom of that range is probably where I've got that line, and that has now been broken and retested also. So entry underneath that bar, that's the first order I've made this week on euro versus the dollar, is on the weekly chart. If you want to follow it, the entry's at 1.0495, and my stop loss is above the monthly pivot at, I'll add 95 to that. What's that? 105.90. No, that's TP1, sorry. 160 pips. Oh, I can't do the maths. 1.0665. No, 655. Close to that. Check it anyway. I better check it, I suppose. I don't want to give you the wrong number. Yeah, that's right. 1.0655. I'm going to take profit before this low here, because I think that's the most significant level underneath where we are at the moment. I'm gambling. Ooh, don't do that. I'm punting. I'm suggesting that price will go through that low there. And if it does, that's the obvious level to me that it will find a little bit of support at. So that profit level is at 1.0400 if you're interested in following that one. That is euro versus the dollar. Other things on the watch list today. Look, I can't go past pound Swissy without making comment. And the reason I can't is because on the monthly chart, we've been talking about this for the last goodness knows how many months. And finally, we now have cracked the bottom of that big bull bar, which was the reversal bar. And I was anticipating that this would break to the upside. Of course, the war has had a lot to say about that, and it's now broken to the downside. The crucial part here is where price currently has stopped on the monthly chart. Of course, that's going to be the same level on the weekly, the daily, and every other chart. But what is interesting to me is that we've broken that level with that bar on the daily. We've retested it with that level, with that bar on the daily. And I think if, again, this risk-off scenario is going to continue, then there's an entry in here somewhere to go short. For me, I'm not really exposed because I'm trading for nothing on both of those scenarios, Aussie, Swiss, and Kiwi yen. So I don't have a problem in entering this. I just have a problem in finding where. at the moment on pound versus the Swissy. If the market were to ignore what's going on, it's a hard word to say, reassess what's going on in the Middle East, then this could well retrace. If it doesn't, however, and it escalates, say Iran jumped into the fray, for instance, or the US wanted to flex their muscle, any of those combinations or any of those would make this just continue to fall off the face of the planet. But it's got a couple of support areas to go. I don't know why I've chosen that level. Yes, I do, and I'll come back to it if I need to. But it's actually a measured move from the breakout of the bottom of this range here. That breakout, or that, sorry, from there to there, say. Halfway mark is about there. I think I could, the candle, that's what I measured, sorry. I measured the candle. And that looked attractive to me. When I pulled that from there to there, and then took it down to the breakout level, which is the bottom of this range, look what happened. So I found that just a little bit interesting. Pound versus the Swissy, if this market is to continue in a risk-off frame of mind, that looks interesting to me. I'm running over time for my slot. Sorry, there are two others, though, I want to point out. Euro versus the pound is one. Reason being that we are at a strong resistance level, previous support, previous resistance, blah, 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 blah. And we've got a box range in here on which we are traversing the top. Daily chart, if we were to come back inside this, let me get rid of that line. It's probably going to confuse the heck out of you. But if we were to come back into here, give me a lower high, just like I said back here, when we did trade that one, we are looking for exactly a repeat of that. If that were to be the case, I would be short in a hurry. And Euro Yen is the other, for pretty much the very same reason. We're at a strong resistance level. And that resistance has been very, 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 very strong. Hasn't been able to get through there for the longest time. Now has. I'm not committed to a direction here, but what I am committed to is looking to see what happens. So if this bar were to close on its low today, I'd probably be looking to trade it long. Don't want to, because I don't want to trade at resistance, but that would be the key. But if it came back, or if it stayed above here, sorry, without closing below the line, I'd be looking tomorrow for another consolidation bar, price to come back in here. And I think that would trigger a short for me underneath that bar. Don't want to trade it today because it is a Monday. But tomorrow, if this bar hasn't closed below that line, I will place an order short below this bar. I'm going to put my stop loss above that one and see how we go. Taking profit at the monthly pivot. Righto, I'm over time. My apologies. G'day, buddy.
Hello, mate. How are you?
Oh, look, I'm a lot better than I was this time. Oh, no, last Monday I was okay. But
yeah,
gee whiz, from Tuesday on, I was just in a very, very bad way.
oh yeah,
I had an incident on the farm where I broke my skin.
oh,
Yeah, it wasn't funny, but that wasn't too bad. Then I got this massive infection in well, I don't know if you know what a sebaceous cyst is, but I've had it for 40 years on my back, and it
right.
decided to become infected. And man, I've just been so crook with the fever since then.
Oh,
Until
really?
probably about, I'm still not well, but it started to come good about yesterday, I think.
Oh, mate,
Nearly ready for a
well,
wine.
that is good news.
How you been?
G'day, Lewis. Yeah, I'm doing all right, mate. Interesting that a lot of the stuff you're saying. I have to ask you about the euro dollar. You said about it being a
Yep.
bit of a prickly pear. Would you pick it with a claw?
Absolutely.
Yeah.
Yeah, I'll be okay with it.
Yeah. So now the second thing is I am in complete agreement with you actually with the situation with the dollar, but interesting. I've gone for dollar. Well, I've gone for gold as a short.
Okay.
And and
Do you
the
know,
reason I think is
haven't heard you say that for a long time, mate.
no, and I think the reason I think it's quite interesting to go for gold as a short is because much of the reason that we're sort of thinking maybe the dollar could gain some traction is because it is also a bit of a haven currency, but
Mm,
gold's a haven, so
yeah.
is it the right one to go against? But what I quite like about gold as a short, and this is a relevant trade for anybody that wants to get in now, really, because the price is pretty much where I entered. Um, what I think is relevant is that it's had a huge boost to the upside. Now, this is the monthly chart where we see these three highs, three little Indians. Do you call them three?
Yep. Three
Yep,
amigos.
three amigos. Yeah, so we've got these three peaks up here. So we still could flush out significantly, and I'm not worried about the big flush out. But what I am sort of looking at is at least a test. Now, look at this down here. This is the big problem, and we've discussed this in some detail over the course of the last couple of weeks, and it is the gap. The gap here between this point and this point is glaring to me,
Mm,
and I don't like gaps. They 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 will be filled at some point, according to kind of market statistics. So at some point, you would think that the market would have to come down and test this area. It doesn't have to be soon. That's the biggest problem with the gaps. But what we have seen is a pretty aggressive move to the upside. And as you said, I think it's probably going to come down to whether the interpretation of where we are now has been priced in. It's not whether it changes per se, but has it been priced in? Where we currently sit with the situation with the Middle East. We saw it with Russia. There's obvious concern out there, so that would suggest gold continues to go higher. But things get priced in, and where we currently sit is the price of gold elevated. The chart would suggest, after seeing this back from the 6th to where we are now. So, around about, I'll just measure it actually. So we got 10 days of trading, so 2 weeks worth of trading. The chart would suggest that this has probably got not, it probably doesn't have enough support to survive up here and continue in this direction. Now, of course, when there is conflict, and of course, when there is extreme behavior that we've had globally, then the charts will react in an extreme way. I guess what I'm banking on is that the extremities may just dissipate for a period. Whether it comes and closes that gap is questionable, but that's not necessary for us to make some okay money here. If we kind of get back to this particular trend line, I think that would probably result in around about a 3-to-1 trade. If we can get to the horizontal level, which will start coming down here, we get to this horizontal level down here. That looks like 1.5-to-1 maybe. So there are opportunities here that suggest that if this is correct, that it's coming down. Now the question is why pick here, and there's a couple of reasons that I like it. Looking at this on the daily to start with, that is a relatively clear bar for some selling at these highs here. Relatively clear because it was still green and it wasn't right at the bottom, but that's still pretty clear. It's in the bottom third of the bar, so that would suggest that this area is going to be protected, and that is currently where the stop goes. I don't really want it there. I want to move it down probably to today's high. But it's currently going to sit up there just to give me a little bit of protection. You can see this horizontal level across here, which has just about been broken on the close, but it's very questionable. It hasn't broken these highs on the close, so there's another reason for maybe see some downside. And then when we come to the hourly chart, then this is where it becomes more of a trade in my style, if you like, because I'm only sort of looking for intraday reaction to potentially hold it into something which is a bit more of a swing. But this is the current sort of pattern going along here. It's right there. So we had this zone here, as a bit of a box. That was tested, and then the market started to rally. So from this point, you could definitely draw the rally from the bottom point as well. So there's also a trend line right along here as well that you need to get in. So that needs to be considered. But that still gives us, plenty of room to the downside. If you switch it up a little bit, it becomes a little bit scruffier, but that looks okay as well. So this may well be, at minimum the first kind of turn point. That's the 1.5 to 1 zone, and that's starting to get confluence. So that looks like a first target, if you like, to me. Gold currently at 1975. We're looking at 1945. So these two areas look possible. Now, the other thing is this is broken down. So we've had this move to the upside. This is a bit of a pattern going on here. It may be forming a head and shoulders as well, but this is a breakdown of this price point. So there are a few reasons to suggest that this is weakening. The dollar is, as you said, not going anywhere. But the big thing for me about the dollar is that the Fed is due out on the 1st of November. Now, that's a matter of days away, really. So with the dollar getting sold off as it has done against the euro, against gold, against the pound, against the Swissy, if things remain capped in the situation in the Middle East and things are currently priced in, I wonder whether we might start getting a bit of buying towards the dollar in anticipation of what could happen to do with the Fed, because the dollar would look relatively oversold if it was just to do with the Fed. Now, because of the situation in Gaza, it does kind of change the narrative a little bit. But if that's parked for now, that would suggest to me that we have a little bit of buying into the 1st of November. Seasonally, dollar looks strong as well. So that's kind of the case that there's a case to be made for strong dollar. So I agree with you about the euro. I think maybe the dollar Swiss is good too. But what I currently like here is the pattern has broken down. So it's giving me a reason to get in. And it's probably the purest thing to trade against the dollar as well. You haven't got, ECB is out in 2 days' time as well with their rate decision. Right. So there might be a little bit of waiting before we see that going on. So it's gapped down this morning. It has, Lewis, but I wonder whether it's filled. I did notice this gap here. No, maybe it hasn't, but it's close, isn't it? So we might see, yeah, that's a fair point, that there may be a bit of a rally before we get it, but that gap there is not even a dollar, and I don't know whether that will be a significant one or not. So maybe it could fill it first, but stops up here. The idea really is to see this start to move to the downside and then shift these stops somewhere around about the daily pivot, somewhere around about these highs, and then we can see if we can get relatively free, so to travel down before we hit that take profit. So that's the plan, mate. That's what we're kind of going to go for, and we'll see what unfolds with that one. But there's definitely a risk-off attitude, huge risk-off attitude. You see the FTSE continuing to move to the downside, and looks by all intents and purposes that we're going to see a bit of a look of this point down here again. So that's going to result in another 2.5% drop on the FTSE as well. So I can't see why the FTSE would all of a sudden start to rally, but some downside looks on. Now there is another line here, so let's see what that is suggesting. Yeah, it looks like there's a little point down there as well. So there's a couple of points, but that still looks like, that's almost a 1% move lower on the FTSE as well. So it does look like we're going to get sucked into some lows before we start to turn around. NASDAQ could be in all sorts of trouble, because the NASDAQ is not only kind of in that risk on, it's got the risk on problem. It's also got the problem with the potential strength of the dollar. So the NASDAQ also looks like it's getting close, and the levels I'll be looking for the NASDAQ are probably down here. I still think that could be relevant. So another, what looks like a potentially a 2% move on the NASDAQ. If that level was seen, how does that coincide with this? Still got some room, I think the NASDAQ really could have a significant drop. So we could be looking at, looks like what was 2, 4, 6%, 5 or 6% drop on the NASDAQ before we find some support. So things look bleak for investors that are bullish at this stage, in my opinion.
Got any thoughts on thoughts on the war? It's probably not the the question I'm asking. But actually, I missed a setup there. I'll give to you later. Oil is interesting because of
Yes,
the war. What would
yes.
it take, do you think? Is Iran, if Iran gets involved, oil goes through the roof, doesn't it?
Yes, I would suspect it would, mate. I can't see anything but that happening, and they've basically said back off to Israel. So
Yeah,
they
there's a
are
warning shot there, isn't it?
is a warning shot. Yeah, I mean they haven't completely thrown their hat in yet, but they are sort of, as I say, sort of trying to at least kind of control what the situation is to a degree. And it's probably going to take. It's you know what I was talking to my friend about this on the weekend, and
Mm-hmm.
it's so difficult because um, whenever the West gets involved, from what I can see, it seems to exacerbate the problem. I don't know. I don't think it helps. Um, and,
100%. And
and
you
it
can
depends.
go back as long as you like, and any conflict you like
Yeah,
to
it's difficult, but
confirm that.
you're talking, and I said it's a bit like brothers, you sort of like you kind of eventually your parents just go, let them fight it out, and and
Mhm.
and and the victor will actually sort of, then they will find their kind of their. I mean, I know it's a lot more complicated than that, but at some
Yes.
point the West needs to step back, probably, I would have thought, and just say, look, that this is actually your region, and you will figure it out. Of course, the danger with that is that it gets so out of control that everybody gets pulled into it inadvertently. But I just think that the West doesn't really understand the depths of what's going on, and also to suggest that they've got the right to kind of get involved in this kind of situation is also, I think, quite arrogant. So
Well, I think
so yeah.
that's the whole point, isn't it? It's human rights is why they're getting involved.
Yes.
Well,
Well, so
what they
is
say
it?
they're going
I
to be
mean, is
doing.
it is it is it human rights, or is it energy sort of protection? I don't know, but that's kind of one of those things that you could debate for hours and never really come up with a conclusion. So I'm not really sure about that. But when I look at the price of oil, when I look at oil, I think your point is quite poignant, is that I see downside
I've
technically.
got to sell underneath that bar,
This one here,
the almost hammer before it,
this one, yeah.
that one.
Yeah. It looks heavy, doesn't it? The actual price of oil looks heavy. The question is, why would it drag down there? And I just don't. I can't find that reason. I can't find a catalyst that would drive oil down. I
Well,
can find a catalyst.
this is the dilemma that we've got, isn't it? Because
Yeah,
of this war.
yeah,
Technically, there were some things lining up with the war and the
yes,
risk off scenario that I pointed out that I traded last week.
yeah,
But now we've got a situation where the charts are telling us go this way and the war is
yeah.
telling us go that way. That's where it becomes a little bit more difficult.
It does. I mean, to be fair, the charts could also be describing some upside. I think the monthly pivot, where you take that monthly pivot out of the equation, the chart looks quite different, because you've basically, on this weekly, you've got a trend. We got
Mm-hmm.
this resistance point here and a higher high. We got that higher low. We got a higher high, higher low potentially. So that you could definitely argue for upside technically if that monthly pivot wasn't there. And of course, it's creating that resistance point. But you could also argue that this bar that happened at the start of October actually kind of puts the trend in question. But it's not over yet. Really, for us to genuinely be looking at downside, we needed a low. I don't think you could call this a lower low until we break this area. Really, already this area now, actually. So where you're looking looks sensible to me. But
Well,
when you
if you
look at,
draw a trend line from the top, you'll see that that's showing me a false break.
oh,
They
from
go
the
through,
top,
yeah.
yes, I totally agree. That's something that I saw as well. Is yeah, now you mention it, it was this weekly trend line that also put this under pressure for a potential move to the downside. But this area has been attempted. We've attempted to get through here. There will be plenty of bulls that are thinking, well, this is a better price than the breakout. So I'm quite happy to get in and see if we break out and go. This bar
Which
is
they've done.
relatively. What's that, buddy?
Which they've done. They're already in there. Yeah.
Yeah, they're in exactly, and this bar's relatively bullish as well. So I think that there's a bit of a question. And as I say, if I was choosing this technically, I'd be looking at this line like you are. I'd be saying, okay, this is a minor downtrend. You know, we are like looking at lower lows and potentially lower highs on the daily. The trend line through here as well, under that particular point as well. So this suggests that we should be looking for downside, and I wouldn't mind taking it, but I just think that the fundamental situation, or you know, the global and geopolitical situation is problematic for oil, and I wouldn't touch it. And equally, I wouldn't touch the euro yen, not for quite the same reason, but similar reasons in some regard, because the yen obviously is a risk-off currency, and maybe because I've tried to get involved in the euro yen. But what I hate about this, when I look at it, it's just range, 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 range. As you said, has this broken? And that's the big question. And because it is a question, it's untradeable. If this hadn't broken, then you could be saying, okay, fine, I'm trading the top of the range. But right now, we don't know whether this is the bottom of a new range. And I think this is a really ugly looking chart on the daily. You know, it's just stayed within, if you like, this area here. Never mind sort of where we currently are, because that's sort of like one aspect of it there. And then you've got this kind of narrower kind of point in here. And it is just, I'm going to have to make it wide so it doesn't stick. You've got this narrow point here. And as I say, this is just a bit of a question. Are we maybe going here and then back down again? Or are we at the level? So euro yen just is one of those ones I looked at earlier. And when you brought it up, I thought, geez, you know what? I was looking at that earlier and I was thinking, I just can't read that. I can't read it at all. It just seems to be stuck in a zone. And it has been for, as you quite rightly pointed out, it's been stuck there for months.
Sorry, I muted to have a sneeze or a cough or something.
Oh, no worries.
We got George in the room. G'day, buddy.
Oh, amazing.
Yeah, how are you guys doing?
Yeah, we're doing okay, mate. Just deliberating.
Yeah.
Yeah, I know it's very this is more of a deliberation morning again, isn't it? I'm looking at a few things. I like your thoughts on euro yen and just the lack of clarity. Even if you look at the yen, it's exactly the same thing.
Yeah.
We don't have the clarity there as yet. I mean, even euro itself, it's down in some kind of a range at the bottom there.
I think the reason we're seeing the yen is so ridiculously hard to read at the moment, would not be the case had the Bank of Japan moved even 6 months ago.
Yeah,
the euro yen would now be almost down the bottom of that chart if that were the case.
You're absolutely right, mate. Yeah, it's the Bank of Japan which are holding this up. You're absolutely right, and I think we all want to get into the yen actually, which is why it's so frustrating. But yeah, I totally agree. I mean, I quite like CAD yen, and I really like the Aussie yen for shorts. You know, particularly because of the risk on, risk off kind of scenario. But yeah, the Bank of Japan are kind of putting pay to anybody who really wanted to own the yen. It's just not very attractive. Fundamentals are actually pretty good from Japan, relatively speaking.
Yeah,
sorry, George.
I guess it exercise a bit of caution then. As far as the currency pairs around the yen are concerned, I mean, I'll still look at it and see if anything sets up that encourages me to jump in on the lower time frame. But as it is now, it's super risky to do that. Then on indices, I mean, we're in a very interesting position.
You haven't got power, have you?
Yeah, I don't have. That's right.
One day I'll just do that automatically, and this will be so seamless, George. You'll go, "Oh, that's good."
I will be shocked.
Or shocked.
Yeah. So I mean, interesting enough, we are, in a bear trend still. And question is, how much more do we have today? I'm going to be looking to see if I get ways to get in short and try and ride it as much as possible. Been a bit slow this morning. I'm not active because I'm still at the home office. I want to go to the business park office. There's things happening, but I'm keen to go short just to follow this. I know there will be a pullback at some stage. Will the pullback come today, or will you have one more day of selling, maybe end up as a doji and then a pullback? But there will be a pullback at some stage, which, if it sets up and it gives you some decent entries, then jump into it. But you got to be careful. I mean, I got absolutely trashed on Thursday. I mean, it was just crazy with the price action there, but I mean, that was Thursday. It looks like a beautiful bear trend day. It is at the end of it, but during the day, it was just crazy. I mean, everything you're thinking of fundamentals kick into place. And so you got to exercise a little bit of caution, but I think we're still bearish just from looking at the price action. Again, FTSE, we are bearish, but here is a problem. These lows here are a problem. Unlike what we had on DAX, where we've already broken beneath what was the low of the month, and earlier on broken beneath the previous low. With FTSE, we're not yet clear whether the bears are strong enough to break out beneath here. So I'm going to be keen just to see what develops. Whether we just try and work, the bulls try to work a double bottom, or the bulls may come in later on during the day and maybe accelerate, an attempted breakout beneath here. So again, which way is it going to go? I mean, huge acceleration down, but then you got to ask, why do we end up with almost a perfect test of that low on Friday when they could have just given us a little bit lower? So a bit of caution there. I mean, then S&P 500, it's similar kind of thing, but a little bit different to FTSE because, there's only one law that's concerning us. That is this month's law, compared to FTSE where we have other laws coming up. But I'm going to be watching that as well. So I'm pretty keen to go short, but I'm very aware of potential double bottoms coming in. That's kind of a quick coverage of where I'm looking at with the indices for today. Hopefully that's helpful.
It's a bit of potential patience then for you, George. I think you're absolutely right. I mean, it does worry me as well. But the problem, I suppose, with this stuff is that it will rarely, if it's going down, it tends to just drop, and it will rarely give you the retracement that would be an attractive point to try and get in. And by the time that's it, if you do get that, then it would suggest that actually moods have shifted quite significantly. So if this is going down, it's just I don't see the opportunity to take the same kind of selling signal. You almost got to take a slightly less obvious sell signal to get into this stuff. But it doesn't look like a time to be confident with stocks, particularly with the Fed as well. You got the Fed sort of coming out in a few days' time, and we got to ECB obviously as well in a couple of days. So German fifth, the DAX is one of those ones that is going to get affected by the ECB in its rate decision. I guess if the rate decision is held, we might even see a rally after that, and then we start to play something else. Tricky ones, mate. How do you feel about the dollar? Any kind of thoughts on the dollar? Jeff and I are both kind of dollar bulls, I guess, at the minute. Jeff, euro dollar, and me gold short. Any thoughts on that?
Well, I mean, I just look at it as the inverse of what's happening on the indices, right? So if we're selling off, which means the stock markets are getting weaker, so the dollar, I'll be thinking the dollar would be strengthening against that. So that's kind of the view that I take. I don't particularly look at the dollar alone to say what's happening with it.
Right.
I just say and look at it as a result of the selling off that's taking place. Then I would expect there to be a bit more strength on the dollar. That's the kind of view that I have on it. So as long as these are selling off, I'll be very weak-minded around the dollar, if that makes sense. I'll be strong-minded. Sorry.
Strong, So looking at weakness against everything else. Great stuff, mate. Okay, well, I don't really see an obvious. I mean, obviously, Jeff and I have got a couple of orders in the market, but I don't see anything sort of like really obvious just yet. Very light on data today as well, so it might be one of those days that you would suspect it would continue to kind of move in the direction of travel. Of course, CPI and CPI data from Singapore actually came in slightly weaker on the core, but CPI data from Singapore came in at 4.1%. I liked the CAD Sing, I think it was. I don't know how that would necessarily affect that. But aside from that, there's not really a whole bunch out there. A bit of manufacturing PMI tonight from Australia. But, when we're kind of looking this week, we're probably looking at genuine market moves. Definitely on Thursday when we get ECB. Any Euro news between now and Thursday may well get kind of reversed. So a difficult one to actually trade. CPI data from Australia on Wednesday could be of interest. And of course, Canada, the Bank of Canada have also got an interest rate decision. So we're starting to get into interest rate season, and we're starting to get into earnings season as well. Interesting one for the stocks, so S&P, NASDAQ, the big tech reports this week. So how have they been affected? We saw actually some pretty good numbers, last time round, considering the interest rate hikes that we've seen to date. Interest rates haven't moved since then. So have they been affected? We've definitely seen the shine come off the AI story. But if those earnings now start to reflect maybe some more tightness in the market, the NASDAQ particularly, but definitely the S&P, could really get a genuine flush to the downside. But if earnings hold up and we get a sell-off, that would look like a buying opportunity. That would actually sort of change the dynamic a little bit. So I think it's going to be an interesting week to watch the data and see how it coincides with the charts. But I think we're all probably of the same opinion that risk off is the better way to go. But there might be a little bit of data which actually disagrees with that, and it might sort of like start to enable us to think, okay, great, bit of risk off is going to actually give us a better price, and we should be buying up. But it's going to we'll see how it unfolds. Sorry, mate.
And the fact that risk off has been fairly substantial, to my mind anyway. In fact, I think it's been over substantial, more substantial than it potentially needed to be at this point. As you said before,
I agree.
Things can change, but at this very point, to me, not a lot has. And I keep saying that, I know, and gold keeps going up, and that's fine. But as long as we've got that in mind, I think we'll be okay. We'll get through it.
Yeah.
Right, guys, that's what we think. We'll give you 5 minutes or so of what you think. If you'd like to ask a question or submit your ideas, we have gone way over time for that. Old habits die hard, and it's because we just like having a chat amongst ourselves. It's great to know.
Mate.
Sorry, gents, I got to step out and get better Wi-Fi. My apologies for that.
All right, mate.
Oh, no problem, George. No, we'll see you next week.
Cheers. Okay. An
1 hour later, George.
Yes, I got
1 hour later, mate. Got it?
1 hour later, for sure. Yeah. Thanks. Cheers. Bye-bye.
Oh, yeah.
Right, mate.
Bye, mate. Have a good week. We should probably actually sort of hammer that home a bit, shouldn't we? That was 1 hour later next week.
Not for everybody. If you're in the UK, it's not 1 hour later. But if you are just about anywhere else on the planet, then yes, it will be 1 hour later, because UK comes off daylight saving next Sunday. Is that right? Yeah, that's right, Ash.
Well, you seem to know more about this than I do. I have to ask people when we have daylight saving coming up. I mean, it's just, all I know is, I've made a concerted effort, mate, this year. I've got my mind because I've got to be honest, and I understand people kind of don't like the UK weather because the perception is it always rains or whatever. But I really like it, and I like the summers are better type of heat for me, and I like the change of season. So I actually really like the UK temperature. I don't like the rain. Don't get me wrong. Not keen on the rain, but it rains everywhere. So that, it's a fallacy that it rains.
I'm in a bloody rain shadow. You can send some to me anytime you like.
Oh, really? Okay. But it rains in a lot of places. But I don't like the change of light. That's the big thing for me. I don't, don't mind the cold, any of that. But it's just change the light and the light. But I'm making a concerted effort this year to go into the winter thinking, right, how can I enjoy the change in light? How can I get my mind so it's actually like, you know, because they have a change in light. They hardly get any light in Iceland. How do those guys keep a smile
That's
on their face?
I'm
It is
hoping to find out.
possible. It's possible to be done. Gap closed on gold, by the way, now. So Lewis's point about the gap on gold is a very good one. That gap is now closed, so it might now give us a green light to go to the downside. So yeah, so I'm making a concerted effort. So any tips that you or anybody else had to get through the darkness of the winter months, let me know. And I'm not talking about wrapping up warm and that stuff. I'm talking about something really positive. Wrapping it warm to me just sounds like you're giving in.
Get up early, go to bed late. Sorry, get up and
Oh
go
yeah,
to bed early.
that's your party spirit. I mean, just party all the time, party every night.
No, it was a slip of the tongue, mate. To go to bed early as well.
Yeah,
Simple as
actually,
that.
I think that's a good point because you then sort of, you know, you got your circadian rhythm kind of coming into play that way, right?
Well, you know what should happen, right? We were
What?
we were created as human beings to work in the sunlight hours and sleep
Yeah,
in the darkness, right?
yeah.
We don't do that.
No, well, do you know, I think there's an interesting point, and this is, you know, not that this is a health show, but everybody needs to be aware. Something that I've been reading recently, which is really interesting, basically says that the diet that we currently have um, may or may not be okay. But one of the reasons that we get sick, we get these long-term illnesses, is because we are getting things that are sticking to our cells that shouldn't be there. And the reason for it is because the food that we currently now produce wasn't being produced 100 years ago. And we haven't had the evolutionary period to be able to absorb the food in the same way. So it might not be that the food's bad necessarily. You know, I was talking to Lloyd and Alexis in Singapore, and Lloyd was telling me about this super clean water that they produce in Japan. And he said it's so clean that if you were to drink it, you'd die. And I thought, well, that's odd. But I guess it's an evolution, isn't it? It's like your cells can't necessarily handle certain chemicals yet. So you know, the food we currently produce, the processed stuff, it's been around for such a short period of time. We haven't evolved to be able to, you know, counterbalance the bad effects of it.
Exactly, and that's why we all dying of cancers and all those
Yeah,
sorts of horrible things that we've introduced to ourselves. Crazy people that we are, or
yeah.
crazy entities that we are. But yeah, what was his
So
name on the moon, dude?
Louis Armstrong.
No.
Oh,
Oh, you'll get us in trouble.
it was one word. I made sure it was one word. Just to,
Yeah.
you know, just hints at it.
Shazam will pick that up, mate.
Yeah.
You're done. Danny, your question: Has gold really considered its peak at the moment? Well, I think both of us had the same opinion, Danny, and it's related fundamentally at this moment to what's happening in the Middle East. So if the Middle East escalates, then gold goes higher, in my opinion. If the Middle East doesn't escalate, then gold goes probably halfway back to where it's come from the last couple of weeks, at minimum, in my opinion. But I can't answer the question: is the war going to escalate, or is the war not going to escalate? My considered opinion was, and still remains, that until a Western influence enters that atrocious scenario that's going on at the moment, until that happens, what's really changed in the Middle East?
Yeah. Oh, sorry, mate. Just had I've just seen a message from Paul about the CAD Swiss. Danny, just about the UK weather. That's awful, mate. You know, and it's definitely a personal thing. I like the UK weather, but I appreciate that it's not for everybody. Makes a lot of people quite sick as well. Right, I'm just going to have a look at this CAD Swiss.
Yep.
Now, your opinion of CAD Swiss, I would presume, is for more downside.
No, not at
Oh,
all.
it's not. Okay. Okay. Well, I think the CAD is quite an interesting one because I'm surprised to see the move with the Canadian dollar in the way it has been, considering its correlation with oil. But what we have is an interest rate decision on Wednesday. I think this may change things around. I don't particularly like the Swissy. I've got to be honest. You know, the Swissy's fundamentals are okay. You know, they're actually sort of they're outpacing in some regards, but in other ways they're not. You know, Switzerland isn't outpacing, and I think that some of this move probably has been to do with the risk off aspect of it. If you look at this, we are basically back where we were when we were looking at these kind of areas down here. When both Jeff and I were saying, you know, you got no business, you know, not trading this long. Now we did have a setup to go long, so we need that. But I am actually looking for the upside. You know,
Okay.
it's a horrible looking chart now because it's not an inverted head and shoulders because it's this right area has come down too low. It looks like a kind of strange cup and handle in many respects, but the handle's on the wrong side. So I don't know. You know, at this stage it's difficult, but the obvious thing to say is that if it starts to break through this point, then we should be looking for the long. But maybe what's less comfortable, but where there is obviously more risk but a greater reward, is to look at this area as the point that we get the jettison from to get through there. And that's what I'd really be quite interested in. You look on the daily chart right now, down, 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 down. No point. I'm not interested in the short. There's no room down here to go short, aside from anything else. But fundamentals, you know, concerns in the Middle East. I get that. I get that's a reason that you would be trading Swissy long. I still don't quite understand that the CAD short because of the oil scenario, but you know that there we have it. But regardless of any of that, there's no room, you know, before we hit significant support down here. You know, that was a really strong area that we started to go to the upside. So that to me is off the table. So technically speaking, and from a risk to reward, you know, the attractiveness of risk to reward, upside is the only way to go. Nothing on the daily, nothing on the 4 hourly. You know, the 4 hourly currently has got this kind of this area here, that channel down there. Now, if we were to get a breakthrough this point at this stage, you know, we're just talking about right now, we start getting a breakthrough this particular trend line, then even if you get that breakthrough there with stops at the lows, you've still got better than 1-to-1 before you hit this trend line. And if it goes, it's going a long way. You know, I would suggest it's going a long way. It's got so much room to the upside, this one. But there are right now the signs are too negative to suggest. You know, there's another level there. There's going to be lots, but the signs are too negative to take this on. Would be my assessment. I would love to get on board, and both Jeff and I did trade it here to the upside, but now it's collapsed down again. I think we're both looking and saying, okay, but you know, business as usual. Let's see if we can get back into this again for the upside. But we need this to carve a low out, and currently it hasn't done that. That would be my thoughts on it.
Yeah, look, to me, this is the chart from heaven. This is exactly what I live for. CAD versus the Swissy, because we have had exactly as you've just described. A wonderful time there a few weeks back, but you could have had just equally as wonderful a time a couple of weeks after. And the reason for that is, you know, my structure has been on this chart for the longest time. I don't know how long now, but it's working absolutely to perfection. And when I see things like that, the only thing I can do is follow it, just continue to do what I always do. And nothing has changed in that regard. So what I'm thinking here is at 100%, there's no downside here. You can't short this at the moment. Sorry, I can't short this at the moment. Ash can't short this at the moment. You possibly can. But as soon as it came off this top, it was a sell. The problem was it went so fast, it was impossible to trade unless you picked that one up there. That was the only way, or maybe that one there. That they were the only two bars that you could have traded. But and it was very difficult to get in from the bottom as well, unless you found that very early entry, which Ash did. I got in a little bit later. But I'll be looking for exactly the same scenario as we got here, as we got here. When we hit the bottom or after we have a significant low, it may well be through the bottom. It may well break out of here. And I'm actually anticipating that that will be the case. But once it does, if I were to see a double bottom sitting there, here, followed by a big bull bar, which is what we saw, which was that massive breakout bar, a dominator for those of you who trade slingshot. Tough to trade that as a dominator, but then you got this pullback scenario, which was fantastic. So the entry's there. So if I got that repeated, double bottom, breakout bar, higher low, happy days. And that's exactly what I'll be looking for to repeat on CAD versus the Swissy. And, you know, as we've said all through the show, the war is there. You have to be aware of it. And if it does escalate, then what I'm saying right now probably won't even be an inkling in my eye, because this will just go short and continue to go short. I agree with Ash in that it's very, very difficult to think of the CAD in a short scenario at the moment. But versus a risk off currency, yes, I can see that. I can totally see where that would happen. But not until, as I say, I continue to say, something changes in Israel. And that could happen very easily, without question. So it's not easy right now, because you do have to think of that war scenario. But like I said, I've got a very clear view on it. Until it changes, nothing's changed. So I'll just play what I'm seeing. And what I'm seeing right now is CAD Swiss is very, very, very near to being in a buy zone again.
Yeah.
So there we go.
Sorry, mate. I know we're about to leave, but I have actually got a potential trade suggestion here. So
Sure.
Just for everybody in the show, this is what I am currently looking at, and I will take this in a bit. But let me just see. Let's do it on this one here. So I'm looking at the dollar Swiss as a long. I'm just waiting for this bar to close. Just making sure this hourly bar is going to close. Looks pretty good, doesn't it? When you sort of look at this on the weekly, I like the inverted head and shoulders. I mean, it's I'm not quite sure whether it's quite long enough, but we'll see. Now let me just see what I've got here. So I have this, I have this, and I have this. So we got left shoulder here. This is the left shoulder. Here's the head, and here's the right shoulder. So it's an inverted head and shoulders. Now we're looking to sort of play it up to the neckline and see then if it can get through. And you know, that's the area that lots of people like to pick it up. But I like to pick these up on the formation of the right shoulder. So I like the way this is looking when it comes down to a potential technical area. Now, if we have a look at this on with the trend line formation and kind of what's going on here, then it's a bit more difficult, because you kind of got that potentially, which could put pay to the upside. And you're probably looking at that as well. So it's going to, so you know, understandably, it looks a little bit more difficult. But let's just see if we got enough room to take. Yeah, I mean, there's a 1-to-1 to take profit there if it works out. So I'm keen on this one, mate, and I
like the chart.
I like the chart too, and what's that? The 20. Let me just see what we got here. Yeah, and the good thing about this is you can get in right on the lows. You can get your stop loss right on the lows. So I'm going to need just to work out very quickly how much it's going to cost me. I haven't got Robot Trader. Actually, not going to risk a lot, but I think it's let's go 8, 9. Let me see what that's going to cost if I get time. All right, what does this cost? Okay, 38. Here we go. Probably about that. Right. I'm just going to see whether this is a trade, mate. I will know in the next
Sure.
next few seconds.
If you want a moment, just let me know.
Do you know, mate? I quite like that. Let me just see what that looks like. Yeah, I do quite like it. It's right on the level. So I'm going to take it. So I'm going to take that trade on that level, and we will see whether it can boost up. What I quite like about it is that if it is to fail here, then we'll know pretty quickly. You know, and it could fail to this point. That's probably get out area down there, but I will put my kind of emergency stop down at that point there. So just taking a little bite on this one, mate. It's that, you know, it seems to be at the lows. As I say, I quite like the dollar at the minute. I quite like the fact that we've got kind of the situation going on with the Fed or on the first of November. The dollar tends to have a pretty good seasonal pattern as well at this stage. There's a daily pivot just below this area, which also might get tested. So I wonder whether we might be in the buy zone without being in the absolute area. But this is my absolute get out area, really. You know, I know I usually put the stop loss in an emergency area, but this is the area that I would not be keen on. So if it closes here, you know, i.e. if it kind of gets down here, I'm not saving that much, but I'll save something if we get something that that does that and ends up closing under that level. If it closes down there, probably a bit more significantly, then I'll get out. You know, maybe losing 3/4 rather than a whole one of the position. It's by no means 1%, but you know, I'll kind of protect it that way. And then if we can kind of get up to that area, then I'll probably move stops rather than closing the position. And the reason for that is that this one has got a positive swap differential, so really I'd like to stay in with full quota. The only reason for me to take profit is to protect the position, and if I can move the stops to protect the position, then I prefer to do it that way, because then I can get the benefit of the positive swap. So that's the idea here, mate.
Right, mate. Happy days. I just had to look at euro dollar, so I better share that one as well. It's not a trade at the moment, but it could work very well turn out to be a setup. So I will give you forewarning of that. Pretty clear to me that we are in a box range, and we're at the top of that range. We've got a trade line that has now just been broken. I would love to see 2 bars here do nothing. So if that were to close as is, rinse and repeat over here, then price were to come back underneath that trade line and retest it. So I better draw that for you because it becomes a little bit convoluted, I suppose, for just chatting about it. Where's my pen? Oh, it's over here. Things have changed. Yeah, that's good. Okay, so this bar doesn't have to be indecisive. It can probably close up here somewhere. That's fine. Anywhere within that area. Then a repeat, another bar in here, even like that. Then back underneath the trade line, even underneath the daily pivot, better still. Come back to here. Then you could either enter there and get out there with a risk of goodness knows what, whatever that candle provides. Or you could enter here with a stop loss up here and profit down here. You'd get around about 1-to-1 out of that one. If you thought it could go further, happy days. But I think it's just a range trade, to be fair. You just want a small candle in here with the retest to get you, say, I don't know, something like that, to get you 1-to-1 or a little bit better on euro versus the $1 30-minute chart. That's what I'd be looking for if I was in front of the charts a little bit later. Righto, we have gone way over time.
Yeah.
Don't know what we're going to do about us, mate. We just keep on having a good old time. Simple as that.
Well, I don't think. Do you know what? I think you are welcome, Paul. I don't think it matters if we're in a bit of a flow. I think we got to say it's going to be a half an hour cap if we're just doing some analysis. But actually, it's not a bad market today. There's some opportunities. So
Yeah,
why not kind of stay on and shoot the breeze a bit?
absolutely.
You're welcome,
And thank
Danny.
you guys for your input as well. We've enjoyed that.
Yeah.
And we'll enjoy it again next Monday. But don't forget, folks, it will be 1 hour later because of UK coming off daylight saving. If you are in anywhere but the UK, 1 hour later. So have a great week ahead, and we'll look forward to your company next week. Have a good one, mate.
You too, buddy.
So bye-bye for now.